Welcome to another episode of Ask the Money Guy. I'm your host, Brian Preston, joined by Mr. Bo Hansen.
That's right. You guys have financial questions. We've got your financial answers. Go out to your favorite social, use the hashtag AskTheMoneyGuy, or you can leave a comment in the comments below, or you can go to our website, moneyguy.com, and ask a question there.
It's Brian Preston, the Money Guy.
So, Brian, this is one, I feel like we've gotten it a lot more recently than we have previously, but generally this question goes something like this. Guys, I get what you're saying. I understand this whole army of dollar bills thing, and I understand how that can be, but I hate having a mortgage, and I want to get this thing paid off. If that's my goal, what's the best way to prepay my mortgage?
Well, what I actually see people make on the comments, Bo, is that paying the minimum is killing me because most people who are Money Guy family members, you're not minimum on anything. You're above average on all aspects. So just to pay the minimum on a loan just makes you twitch a little bit, makes the hair on your arm stand up. So I wanted to address this but first, to let everybody know kind of what we share is guidance that is driving people crazy. We have shared that mortgage debt is some of the lowest interest debt you will experience in your life.
Sure.
And it's also on historically appreciating asset. And there's enough spread on the risk premium you get between what you're paying on the mortgage to what you can make in investing. And compounding interest is so powerful the younger you are that we have a rule that we tell people. If you're under 45 years of age, be careful getting too carried away with prepaying your low interest mortgage because that money might be more powerful in your army of dollar bills saving for retirement and financial independence. Once you're 45 and older, that's me, you can actually start prepaying your mortgage because your goal there it's kind of changed. Now we're in the phase that we do want to be completely unencumbered to have financial independence by the time we approach retirement. So 55, 60, and the average person, Chris Hogan shared with us, the average millionaire pays their house off within 10 years. It's not usually their first house, but it is somebody like myself, and they're usually paying it off in their 50s. So, but I hear you. So that is I wanted to set up the foundation to let you know that I also understand this is not always a black or white issue. You don't have to say, I'm going to not pay any more, $1 more than the minimum, or I'm going to load it up and have this thing paid off before I'm even 45 years of age. There's a lot of gray room right in between. So we actually, because we're nerdy enough, we said, let's run the numbers. We can get full-time equivalent Daniel to run the numbers on this so that people who are just so sick of paying the minimum can know maybe there's a better strategy that still lets me respect what Brian and Bo are sharing on don't get crazy and carried away on prepaying the low-interest mortgage debt, but still lets me check the box to know there's a better way of prepaying debt.
And here's what we wanted to do. We wanted to make it fairly simple for you guys. We didn't want you to have to break out an amortization schedule and do all kinds of calculations. So we wanted to look at 3 common strategies for paying off your mortgage or how you should approach it. So strategy number 1 is just pay the normal monthly payment. Whatever the mortgage company says, based on your amortization schedule you need to pay, just pay the normal monthly payment. That's not going to prepay at all. It's going to pay it over the term of your mortgage, 15-year, 30-year, depending on your mortgage, and just do what they set out for you. Option number 2 is, okay, well, why don't I just pay a little bit extra? I'm going to round up to the nearest 100. So if my mortgage payment is $958 a month, I'm just going to pay $1,000 a month, and I'm going to let that be the way that I pay off the mortgage. Or the third one, and this one's kind of clever, I like this. Rather than paying your mortgage payment monthly, so having 12 payments per year, you say, I want to pay biweekly. Well, if you pay every other week, you'd actually make 26 payments in the course of a year. Well, 26 payments is 2 more half payments than 24, so you're actually paying 1 extra monthly payment per year.
Hey, I do want to give a catch on 3.
Okay.
Just because we're going to show the numbers, and I want to nerd out with you, but I want to tell you to be careful. Some mortgage companies aren't going to let you send half this week and then another half
in 2 weeks.
In 2 weeks. So you need to pay attention to what your mortgage company requires and actually allows. Don't use a third-party company. I don't want you paying $300 setup fee plus an ongoing maintenance because you might get yourself into something you can't get out of. But it is worth a phone call. Call your mortgage company and say, hey, do y'all have a bi-weekly payment plan that's just a value-add service? And a lot of them will do. Now, if they don't, no big deal. We're going to tell you how to do this in a do-it-yourself type methodology. But it is one of those things you need to make sure you do it the way your mortgage company, because they're the ones that are doing the accounting. They're the ones run the amortization table, and we want to make sure we keep them happy.
Yeah, so the real easy math is if you're someone who your mortgage company doesn't make available bi-weekly, just take your monthly mortgage payment, divide it by 12, and add the principal payment onto each month, right? And so that way, essentially, over the course of the full year, you will have made one extra payment over that 12-month period.
So let's get into math. Let's nerd out on this thing, Bo. Go ahead and show them where we're at.
So here's what we want to say. Let's assume that we're going to do a 30-year mortgage. So everything we're looking at is 30 years. Let's assume that right now mortgage interest rates are 4%, and we're going to buy a $250,000 house. We're going to put 20% down. So that means that we're actually borrowing or financing $200,000. Well, if you choose to go with strategy number 1, which is just normal monthly payments, your monthly payment is going to be $954.83 a month. Well, because you are borrowing some money, you got to pay interest. So over that 30-year period, you will pay $143,739 in interest. So the actual cost of your house, is a $250,000 house. What you actually paid for it was $343,739, and it took you 30 years to pay that. So that's kind of our baseline. That's where we're starting.
Yep.
So now let's look at strategy number 2. We're just going to round up. So instead of paying $954.83 per month, we're just going to pay $1,000 per month. Well, if we pay $1,000 per month, we're going to pay total interest of just under $123,000. That's going to take the total cost of our $250,000 house to just under $323,000. And that means we're going to have the house paid off in 25.2 years.
Wow.
So just by rounding up a little more than $40 per month, we knock 5 whole years off of the mortgage.
Pretty powerful stuff.
It's insane. So now let's look at strategy number 3, which is instead of paying monthly, we're going to pay bi-weekly. Well, what that means we're going to do is we're going to pay $1,038 of cash flow out per month. The total interest we're going to pay is going to be just over $120,000. The total amount that we're going to pay for the $250,000 house is actually just over $320,000. And this one actually pays off even a little bit quicker. Pays off in 25 years even.
So we have a payoff slide, and this is if you're looking on YouTube, I want you to. This is what I like is that we actually put everything into different columns and rows, so you can actually do a comparison. Now, coincidentally, Daniel chose an amount with $200,000 that it worked out to be almost the same, whether you're rounding up $100, and that makes sense if you look at what the monthly payment is. This could actually become a bigger or smaller difference depending upon how big your mortgage actually is on looking up the rounding up or bi-weekly, but it's still a powerful concept. And this is where I'm going to give you guys permission because I think it is powerful that just rounding up, like you said, Bo, to $1,000 from $955, or to $1,040 or $38 a month. I mean, it's not that much money, but it can make a dramatic difference. So I'm going to give you guys permission. I still stand by the fact that if you are under 45, I want you focusing your army of dollar bills on saving for the future. But I'm going to give you a little bit of grace that if you want to round up or if you want to do a bi-weekly payment plan because paying the minimum is absolutely driving you crazy, I think it's okay. Now, don't misread this. We could have gone in a completely different direction and showed you how every bit of that $45 on the roundup or even the 70, close to $80 a month on the bi-weekly payments, and if we invested that and earned 9 or 10%, it would have still been better to invest that money. So do not mishear that saving that 5 years is now superior to investing. It's not. It's just that I do agree with the fact that I think you can chew gum and walk at the same time. So it is one of those things that if you are serious, and that's why we give you the goal of saving 20 to 25% towards the future. If you have checked that box in your financial order of operations, then it is no problem to also be rounding up or being bi-weekly. I think those things can actually happen at the exact same time, and you're going to end up in a much better place.
We absolutely love questions like this where we can break out a spreadsheet, run through the numbers, and actually put the rubber to the road. So if you have a question you'd like for us to dissect, you can go out to your favorite social media, use the hashtag #AskTheMoneyGuy. You can leave a comment in the comments below, or you can go to our website, moneyguy.com, and ask us a question there.
Great question, guys. Money Guy team, out.